Okay, what would you do with $1 trillion? It's a fun question, right? Well, for OpenAI, it might not be a question. It might be their shopping list. So today, we're going to dig into one simple question. How on earth could a bet that big ever make sense?
And I'm not just throwing around a big number for shock value. This is the potential price tag for what they're planning, projects like Stargate, this massive AI supercomputer. We are talking about a level of spending that is it's honestly hard to even get your head around.
So yeah, how do you even start to analyze a bet this massive? You can't just say, oh, they've got a great story. No, you need a serious, rock-solid financial framework to figure out if the numbers have even a ghost of a chance of adding up.
And to do that, we're going to borrow a tool from one of the best in the business, NYU finance professor Aswath Damodaran. He has this framework that is tailor-made for situations just like this one, valuing a huge, almost unbelievable story by breaking it down into 3 simple, manageable steps.
Think of this framework as a journey, or maybe a 3-act play. It's designed to take us from this grand, sweeping vision all the way down to a cold, hard number. We start with possibility, then we move to plausibility, and we end with probability. You see, the whole point of this framework is to impose some discipline. It forces you to connect a really exciting story, building true artificial general intelligence, to the boring but essential business fundamentals that could actually make it pay off. It bridges that gap between hype and reality.
So here's our roadmap for today. First, we ask, what's the biggest, most audacious story possible here? Then, second, is there a believable, plausible way to actually make money from that story? And finally, the moment of truth. What's the probability this all works out when we actually run the numbers? So let's kick it off with Act 1, possibility. Okay, so what is the biggest, most ambitious story OpenAI can possibly tell an investor to justify a $1 trillion investment? I'll tell you right now, it is so much bigger than just making slightly better chatbots or fun image generators.
This is the real scale of the vision. We're not just talking about creating better software. We are talking about a future where autonomous AI agents become a brand new form of digital labor, completely rewiring the global economy. The market they're going after isn't software, it's intelligence itself.
And look, this isn't just some sci-fi dream. Market intelligence firms are projecting that this market for digital workers is set to grow at a compound annual growth rate of nearly 50%, a 49% CAGR. That kind of explosive growth is the fuel you need to make this possibility narrative feel tangible.
Okay, a fantastic story is one thing, but any serious investor is going to ask, show me the money. They need to see a clear, plausible path to generating revenue. So, how could OpenAI actually generate the kind of cash flow to support a $1 trillion bet? Let's break it down into the mainstreams.
All right, the first one, and you could argue the biggest one, is all about a fundamental shift in what AI does. It's moving AI from being a tool that just answers our questions to an autonomous agent that actually does the work.
Just think about it for a second. AI agents handling all your customer service calls, generating sales leads, even doing complex financial analysis. And this is already happening. Companies like Salesforce are building platforms like Agentforce to do exactly this, creating a huge, ready-made market for whoever builds the best foundational models. And the monetization is so clear. You charge per agent subscriptions, you charge for consumption, you get the idea.
Okay, next up are the revenue streams we're probably a little more familiar with today, but imagine them scaled up to a whole new level. This is their core business, but on steroids.
And the crucial thing to see here is that it's a multi-layered strategy. They can charge premium prices for API access to their absolute best models, like the upcoming GPT 5.2. They can monetize incredible generative video by the second with something like Sora. And of course, they can keep scaling their consumer subscriptions like ChatGPT+. The point is, these are already proven, scalable business models just waiting to be expanded.
All right, this third one is where things get really, really interesting. What if that $1 trillion infrastructure, that massive cost center, what if it wasn't just a cost? What if the infrastructure itself became one of their biggest products?
Deloitte Insights has this great term for it, the AI factory. The concept is super simple but powerful. You build these absolutely massive, purpose-built data centers for your own AI models, and then you turn around and sell all your excess compute capacity to other companies. I mean, this is the classic Amazon Web Services playbook, right? It's how you turn your single biggest expense into what could be a massive, profitable new business.
So, we've got a world-changing story, and we've got several plausible ways to make a whole lot of money from it. Now, for the final act, probability. Do the numbers actually have a prayer of working?
And for this, we have to turn to a classic tool of financial analysis, the discounted cash flow model.
A DCF is where the story truly meets reality, because it forces everyone, to put down concrete assumptions about the key levers of value. You have to estimate revenue growth. How big will the cash flows get? You have to set an operating margin. How profitable will they be? And you have to guess the reinvestment rate. How much money do you need to pour back in to keep growing? And trust me, to justify $1 trillion spend, the assumptions for these levers, they need to be heroic.
And this table here really lays out the pathway. To justify this kind of spending, you have to believe in something that looks like the base case, or even the bull case. I mean, just look at it. That means you're assuming they can sustain 60 to 80% revenue growth every single year for a decade, all while achieving some of the highest profit margins in the entire tech industry. That is an incredibly high bar to clear.
So, after running through the framework, where do we actually land on all this? Is this trillion-dollar bet a stroke of absolute genius, or is it a complete fantasy? Well, the answer is, it's complicated.
And this really gets to the heart of it, the central tension of this whole bet. Is it plausible? You know what? Yeah, absolutely. The math can work if you're willing to make some heroic assumptions about the market and their growth. But is it probable? Well, that is a very different question. The path from here to there is just filled with immense hurdles. We're talking ferocious competition, massive execution risk on a scale of infrastructure we've never seen before, and a complete minefield of regulatory and geopolitical challenges.
This quote from Deloitte really just nails the situation we're in. We are at the beginning of a new era. And the organizations that come out on top will likely be the ones that make the biggest, the boldest, and the riskiest bets on the fundamental infrastructure of AI. It's a high-stakes poker game, for sure.
And that really is the key takeaway from all of this. This framework doesn't give us a final yes or no answer. What it does is give us the right question to ask. This entire trillion-dollar bet boils down to a handful of heroic assumptions. And the key for any investor, or really for any of us just watching this amazing story unfold, is to decide which one of those assumptions you're truly willing to believe.